Good morning, everyone, and welcome to the Big Picture with Jeff Zananiri and Roger Scott. Jeff, how are you doing today?
I'm excellent. What's up, Roger?
Oh, doing well. Got back from New York, from beautiful New York, a few days back. You know, it's amazing. We don't realize how stressed out we are till we actually start coming back from these trips and realize how, because it's so inside of us. So I actually got a chance to relax a little bit. I had a great trip. New York, from what I saw, was in full swing.
Yeah,
The weather was beautiful. I know you're originally. That's your old stomping ground.
yeah. The Big Apple. Gotta love it.
Yeah, we stayed at Soho, so it was very, all the youngsters and the hipsters and all that fun stuff.
Strange smells in the air.
Oh, don't even go there, man. Non-stop, everywhere. I mean, craziness. Anyway, folks, we've got a lot to talk about. Jeff, let's start with your perspective. I mean, I know you. I heard a couple of comments about Pelosi this morning.
The hell's she doing? What's she doing over there? This is not. See, this is the problem. The problem is that she's taking a trip that isn't an official like. So everything you do is being examined on the international stage as foreign diplomacy. It's your international relations policy. And so the Biden administration did not give their blessing for her to go to Taiwan. China certainly doesn't want her to be in Taiwan. So what the hell? What is she doing? Like, once you say you're going to do it and then they threaten you, you can't back down because then you're going to look weak on the stage. But I don't really understand what the point of her provoking China by going there right now is at this time where everything I saw from the Biden administration is very dovish towards China. They want to thaw out some of the anxiety that Trump administration had created.
Right.
So I think the market's just trying to like figure out what the hell is she doing? What is the point? Is there a plot? Is there a theme? Do they know what they're doing? So I think it's kind of like that's the problem, personally.
And
I don't
and,
think
and
like there's a World War III going to start. That would
no,
be
no,
insane.
but just to add to everything you're saying, I couldn't agree with you more. I agree with you 100% on everything you've said. But just to add a little more anxiety to the mix, the fact that her husband is a stock trader doesn't help the situation either, because I could think of some really great trades to make based on that environment. Now,
Well, that's
again,
what I'm saying. I mean, I'm like you, man. I'm a little bit. It's not conspiracy theory, but I'm just
no,
like
no,
this.
I'm not a
What is
conspiracy
Taiwan
theory
famous
guy.
for? Taiwan is famous for semis. What is the Congress just passing? A big semi
Right,
bill to fund
right.
American chip manufacturing and design and everything.
And we know he's a
Invention.
trader, and we know the guy's a trader. So it's like,
I don't get it. I think yeah, there's got to be some sort of like, there's like some commercial benefit for her by doing this, but it's a bad look. It's a really bad look for America. I think, like, with all due respect, the speaker needs to be reined in. I mean, we're one country. Should something bad happen, the United States is going to be together as usual, as always, as we always are internationally. But it would be nice if like people didn't just do shit abroad for personal benefit in their stock portfolio. Like, you've done enough, lady. Like, the whole market's down this year.
yeah,
Everybody's trailing. And we just saw something on our internal research report that showed the returns of individual members of the United States Congress. And there's like 3 or 4 dudes that are up over 100% this
yeah,
year
yeah,
trading.
yeah. I've seen
Two of
that
them
as
are on the
well.
finance committee that passed this chip bill. So I don't
Right.
know. I mean,
Yeah, it's squirrely. It's definitely squirrely. I don't feel good about this. And you know what? I'm gonna tell you, I laugh at those conspiracy theory guys. I'm like the last guy on earth to be a conspiracy
But
theorist.
what is she
But
doing? It's not
right,
an
exactly.
official. It's not
Right,
official diplomatic visit. It's not
right.
something that the State Department, who deals internationally as the representation of the United States, has initiated. This is something completely from the House Speaker's own personal, individual initiative. So I'm like, what the f is she doing? What is she
Yeah,
doing?
I'm totally confused. I'm completely confused by this whole thing.
It's a bad look.
Yeah, it's bad look, and she doesn't have an answer. So let's get back into the fun stuff. Let's talk about the markets a little bit. I wanted to get your take. I wanted to get your take on and it's interestingly that you kind of mentioned chips already, we got a big chip stock reporting today. We've got AMD on the table, and after the close, wanted to get your take, wanted to see what you thought about earnings and if you have any expectations and overall what you're thinking of earnings so far.
So AMD, so I've been playing this, I like it when I find one winner and one loser in a sector and I can be hedged. And I've been
Yes.
playing this AMD long, Intel short, semiconductor money link for the better part of 2 years now, because it's just gone one way. AMD has been eating Intel's lunch. They've been a much steadier company. They execute, they run better, they're increasing their market share. So Intel just put out a report last week, which is terrible. Worst report they've had in over 10 years. And everyone's trying to figure out, is that, is that symbolic of the weakness in the broader sector, or is that just a company specific problem because AMD's kicking their ass? And I think AMD is going to show today, like some of the other tech stocks that have had good earnings, that good run tech companies can still make money and are going to make money. And I think AMD is going to report that, is going to have a positive report.
So let me tell you my thoughts on it. They're expecting $1.03, which is up 63% year over year, and they're expecting revenue of 6.5 billion, which is almost 70% increase. In my opinion, and again, this is just my opinion, I think they're going to do okay on the revenue front, but I think they may be a little soft. And again, I don't have a crystal ball. They may be a little soft on the year over year EPS because they're really, 63% is quite a bit. But and let me tell you the other thing that again, our job is to show all the weak sides, the strong sides, kind of give everybody.
Yeah, sure.
So
there's no crystal ball here.
No. And by the way, I couldn't agree with you more regarding.
Yeah, we talk mostly. This show's mainly like big picture stuff, so I don't want to. Yeah. I don't want to get too micro.
No. And that's actually where I'm going. So actually, that's where I'm going. Here's the problem that I'm having right now with the chips, the entire chip sector. My beef is this. You see that little area right here? So that's the pre. I call this the pre CPI, the 8.6 CPI that took us.
It was 9.1. It was 9.1.
No, but this one,
the one back there, the previous one.
Yes.
Yeah. You're right.
This one right here was 8 points. This was the one that everybody was just like Grim Reaper time, That
was the worst until the new worst.
Exactly. But the market really got like super bearish here. Like everybody was like, this is when like every headline was like, world's coming to an end and all that, all that crazy crap.
Right.
So I'm looking at this resistance level, and here's the cool thing. Well, I don't know if it's a cool thing or not. If you look at consumer discretionary, they went above that level. And if you look at tech, straight up tech, and by the way, I think they're both going to come back down. By the way, but that's for another.
I do too.
Yeah. We all think they're going to come back down to the big. But nonetheless, they went above that level where the chips did not. So that's what's got me. That's what's got my.
And it's crazy because they have such a boost from all this government handout they're about to get. I mean, that's a massive bill. That's $80 billion for the industry, for you Americans. Yeah. Dude.
So I do believe AMD is going to continue outperforming Intel, but in the big scheme of things, I'm getting a little nervous because of the technicals.
Well, that's why I'm not in the trade right now. So I don't want to get too micro, but people are asking me, and I'm not in the trade. There's a reason I'm not in the trade, and it's what you're showing here. It's a 50-50 ball for AMD right here, specifically the stock specific in the mid 90s. Could it trade 110? Yes. Could it trade back down to 80? Yes. I don't like it because it's a 50-50 ball. I like it when the odds are in my favor and I have a lean. But yeah, I mean, from a sector specific standpoint, semis are semis. Listen, we're going into a recession. Let's dial back 30,000 foot over. Let's go back. Let's blow it back up high. I still think we're going into a recession. Yields have come down really fast, which has told us that we're going into a recession actually, and that the Fed is not only going to have to stop tightening, but they're going to have to cut interest rates again. Because if you look at the 2-year yield, which is yielding about 2.9%, we got the Fed funds right now at about 2.5 at the top end of the range. So they're telling you that over the next 2 years, the Fed's got another 40 basis points maximum of upside in what they're going to raise rates. Now, I personally think that it's going to be a back and forth thing, that unless they stay at higher rates, you're going to see inflation just flaring, because we haven't seen it stop. Like this CPI print that's going to come out this month is going to be the most watched number ever. Now it
Oh yeah,
should be weaker. It should be weaker.
right,
What
right.
should be
Agreed.
weaker has been the case for the last 6 months. Until we start seeing it be weaker consistently, I think you can't take the inflation card out of the game yet.
Oh, no way, no way. I wouldn't even. I think we. I think. I mean, the question of whether a recession is imminent, we can have a discussion. But whether inflation is going away, I think we all know it's here to stay for quite some time.
Well, then, so then they're going to have to do, but they're going to have to they're going to have to tame it, is the point.
Yeah.
That's the whole point. The point is that they're going to have to tame it. And so that's why the jobs number this Friday is such a big number. Or, yeah, there's Friday, I'm sorry. Such a big number coming out this week. Because if the jobs number is strong, that's going to give the Fed more runway to say, we're not in a recession. So the big argument that like Paul Krugman, who's the worst economist on the planet, is making is that unless you have a jobs recession, you can't have a recession. And with 3.6% unemployment, which is what they can say, yeah, I'm seeing it right there.
Yes, it's right here.
That's full employment. So we don't have a jobs recession, right? We have a contraction 2 quarters in a row, which is textbook, but jobs market's still strong. So if the jobs number comes out strong, non-farm payrolls comes out in line or higher, adding jobs, then that might be very bearish for the stock market, because people will say, well, maybe this 2.6% on the 10-year is wrong. Maybe the 2-year should go back above 3, and maybe they're going to have to do another 75, and then they're going to have to do another 50 after that. They're going to have to keep raising rates. So right now, the case is the market's making this case that the heavy lifting of the Fed and tightening is over. And I think that might be a little bit presumptuous and early.
And I agree with you. I think right now we're still in a very delicate very delicate position. And I think and I agree with you for the most part. I mean, a lot of traders believe that we might have already starting to come out of this. I think we're just maybe 60% in. If I had to put a number on it, maybe.
Yeah, I like that number. I like that
somewhere in the 60%. I think nothing will happen. Nothing meaningful will really happen. Maybe something negative will happen, but I don't think anything really meaningful or positive will happen till after the midterms. And also, and also another factor, and this is something we definitely need to talk about, is global economy. I mean, we're finally the Fed is starting to say that the U.S. dollar rise is hampering the economy, that it's moving up too much, too fast. I think that's going to start eating into things. I think it's going to slow down a little bit. What's your take? You and I never talk about the U.S. dollar.
I think the dollar is a net negative for massive corporate countries. It's a net negative. It's a massive negative for emerging markets. You want to talk about an inflation nightmare fuel? Try being in Turkey right now. Try and be in Argentina right now. Try and being in a place that's always had inflation problems, that hasn't had a steady fiscal balance sheet, and has massive flares and costs all the time, because they're at a dollar. So the dollar is the world's reserve currency. I don't know if not a lot of people that watch what we're talking about know that. What does that mean? It means that every other country has to be a purchaser of dollars. They're out there. Foreign governments are out there bidding dollars all the time. Corporations and other multinational corporations from other countries bidding dollars all the time. So when countries are at a massive dollar deficit, that means that they have a shortage of dollars. They go out there and they chase the dollar higher. It's like a mutual fund manager that needs more of a stock. So it becomes like a vicious cycle. It becomes a self-fulfilling vicious cycle. Right now, the world is at a massive net negative of dollars. And there's a lot of people chasing dollars for a variety of reasons, not the least of which interest rates are higher here than in other places.
Right.
Which makes it attractive to get dollars and borrow in treasuries than having, your own local bond yielding nothing. You can get a 2-year treasury in the United States yielding 2.9%, which is not nothing. So that phenomenon, I'm getting really nerdy here, really wonky, but that phenomenon creates a bad situation economically for the world economy. It's actually better for the US, for companies in the US, for people in the US that transact only in the US. It's the best thing possible.
Yeah, but everybody else, I mean, we all know the markets are very, very globally driven right now.
And the
And
dollar's been doing some of the Fed's job for it. That's what's been
right,
causing some of this commodity pressure.
right,
Dollar is strong, so commodities are becoming cheaper in dollar terms.
exactly. What do you think, or better question, how do you think the fact that that Europe is starting to, starting to raise their rates finally after 11 years? I mean, it couldn't. I mean, folks, between us, it could have come 5 years earlier, would have been good. But anyway, I digress. Do you think that's going to start pulling some money away, or just or on a practical level, not yet? Because as we always say, money loves to be where it's taken care of best. And
I love that. I love that expression, Roger. That's like I should have that written on a plaque.
I
It's
knew
true.
you would like that.
Yeah, money goes to where it's best taken care of. And the Europeans are not great stewards of capital in general. They run massive deficits. They have huge entitlement programs. Their economy is actually much weaker than the US economy that we're talking about now, where we're like, are we in a recession? They're for sure in a recession in terms of the employment picture being much worse. They have much higher unemployment. The growth just isn't there. And they're much more dependent on China, specifically Germany, which is the engine for the entire continental European economy. Germany is a manufacturing country that basically just fulfills China's industrial expansion. So Chinese, building all these phantom cities, praying that all these farmers would move into the city and get jobs making widgets, which didn't necessarily happen, are starting to contract. So one of the big things that hit oil yesterday was we had Chinese economic number come in really terrible, really soft. It was contracting. Their manufacturing number was contracting, which was super bad for Germany, who depends on them to buy their advanced industrial machinery.
Right. Very, very true. I'm very glad you laid that out, because that's actually extremely.
I'm so
accurate.
nerdy today. I'm
No,
boring
but you know
myself,
what? No,
but I think
but
it's good for people to know economics.
This is the global. This is the big picture outlook. This is very important. But I will say with that note, I follow China very, very closely for obvious reasons, and you're 100% right. Things are not well, but I think, unless they're spinning it, and we won't know for another 6 months or not, they seem to be really trying to get out of it. They're getting. Remember 2 years ago when you and I were talking, how they were like, we don't care about the big companies, we care about our
China, you mean? China,
yeah, right? China. And now it seems like they're going back, and now they're going a little back. Now they were
locking up CEOs and shit.
Do you remember that? I mean, it was crazy.
Yeah, it was crazy.
Yeah, we'll just ruin our own economy to preserve our culture.
They've walked it back considerably.
They've walked it back. Okay. Just wanted to make sure you and I, because it's been a while since we visited.
But they've walked it back for a reason. They've walked it back for a massive reason. They got the companies under control. They got them to a size that they can live with. Alibaba is like 1/3 of the size of a company that it was 2 years ago.
That's
3
true.
years ago. So they were worried that like Alibaba would be a bigger decision maker than the Communist Chinese Party, that they would have more international effect. As Americans, this is counterintuitive to us.
We think that's completely nuts.
If we have anything, we have corporate diplomacy. We believe that our corporations making money in other countries for other people, giving people products, is the best diplomacy we can have
in the world.
We don't care that they hate Starbucks, they hate McDonald's, they hate our consumerism, because we think, and I think that's our ethos, that there's a demand for, if the marketplace has a demand for it, well, F it if a few people don't like it. If they don't want it, it'll fail economically. But if it works, then it's better for everybody. It'll provide jobs, et cetera, et cetera, et cetera. So that's what we export to the world. So for the Chinese to be like, hold on, Alibaba, you're too big. Like Jack Ma, you're bigger than Xi Jinping. That cannot happen. So they knocked him down a few levels. They got him where they like him. But do you want to be invested in a company that isn't allowed to grow to its maximum potential? I don't.
No.
Long run, I'm talking. I'm not saying
No.
trade
Of course,
next 3 months.
of course. I remember those conversations really well. I mean,
I'd
I
still
remember.
rather own Amazon than Alibaba for the
Oh,
next
any
20
day of the
years
week.
in my
Of
kid's
course.
retirement account, in my third, fourth grader's retirement account. I'd rather own Google than Tencent. I mean, it's a
Definitely.
no-brainer to me.
I think Jeff, and this is just me personally thinking and talking. I think that the next big thing from China is going to be when their electric cars really start gearing up. I think that's going to be huge, and I think they have a very different plan of attack than U.S. does. We kind of started off from almost like a luxury division and are working our way down. They're starting from a very economic division and working their way up. And ultimately, I can't really say which way is better, but with the number of people in China and with the amount of
But here's the wild card. Here's the
yeah,
wild card. I'm going to give
yeah.
you the wild card. I'm going to give
Tell
you the
me.
wild card. Let's say that this Pelosi thing, and I'm not going to say it like unwinds now and everybody goes crazy today, but let's say it really pisses the Chinese off. She leaves, everything's good. And then in 2 weeks from now, they do something incredibly hostile towards Taiwan when nobody's there and says, you know what? You woke us up. You reminded us this country is ours,
Right.
ours. And so then the United States retaliates the best way the United States retaliates against everyone, the same way we retaliated against Russia and says, F you, you're out of the international economic order, which we still run.
Right.
Then what? Then
Oh.
what happens to Chinese companies, which are already being examined to be delisted, et cetera, et cetera, et cetera?
I don't even want to think. I don't even want to think.
This is a risk. You have to. You have to think about these risks.
No. Now the odds of that all playing out are very small. But yes.
But so are the odds of Russia invading the Ukraine.
Yes.
So are the odds of having a pandemic.
It seems like all these little outliers have been kind of working out right lately. They've been all kind of mixing because it's a matter of time. Eventually,
if you're not thinking about what could go wrong in your scenario, you're doing it wrong right now. You have to think about what could, you have to think about some of these risks, all things being equal. So for instance, I'll give you, we don't normally talk about these things, but I'm gonna offer up, and this just came out today, a new money trade that I put on. It's a new money.
Please.
And it's got nothing to do with China. It's got a little bit to do with China, but it's you'll love this one. It's a FANG. It's an intra-FANG money.
Oh wow! I like intra-FANGs. Tell me.
Long Google,
okay.
Short Meta.
Oh, I love that one. I'm all in on that one because I can't. I love Google and I can't stand Meta. It's perfect.
So think about it. And I'm going to start from the top. 5 years from now, or 10 years from now, could you see a world where Meta doesn't even exist because their usership is basically dwindled to nothing? Or they exist, but it's such a toned down way.
It seems to be going that way.
That's the trend. But Google is so entrenched in the global economy.
Google isn't going anywhere. Google's the future.
The cloud, the search engine, YouTube, the
self-driving cars.
The cars. YouTube is so sticky. And then you have Meta over here that's building a freaking virtual reality goggles. This is an 8-year product that hasn't done shit.
Excuse my French, hasn't done anything.
Yeah. I'm sorry. I got you all.
You got me worked up because I feel the same way. I read the same thing you do, and I feel exactly the same way about
thinking. That's how I think about all all of it. I think about the worst case, and then I think, okay, well, I want to be short things that the worst case is more than just a possibility.
No, it's a good one. I like it. I got to say, Jeff, this has probably been the best session that you and I have ever had. We went totally raw today.
Well, you know what the thing is, listen, if we're not going to try to beat our best every time we do this, then philosophically, what are we doing it for?
No. This was a great session. Thank you for your time this morning. I really appreciate it, and I'm very anxious to see how this whole Pelosi thing plays out. I mean, I'm very nervous about this.
I want to get off the phone to see if there's going to be armed guards on the runway telling to come.
No, it's definitely something we want to follow. What I'm also going to follow is I'm going to remember the days that she was there, and I'm going to look back at her husband's filings to see what transpired in his account during these sessions, because I think that's a very interesting analysis that we must do.
I think there's one thing that everyone in the United States needs to agree on right away and right now, and it doesn't matter what politics side you're on. We got to ban these people that go into government from making money on stuff that they decide.
Agreed.
Blue
Agreed.
and
That's
red.
just blatant. That's just, yeah. And you know what? I really haven't met too many people who feel differently about that. I think most people agree with us on it.
I think
it's
that's a common. I think that's you're right.
Yeah.
I think that's common wisdom. I think
Yeah.
that's
Yeah.
universally agreed upon. But
And it's pretty blatant. It's pretty blatant.
Yeah, we do nothing. Yep, we do nothing. We've been talking about it for many years.
If you and I did that, the SEC would call us before we would hang up the phone to place the trade. Here they do it publicly.
You and I are so careful about every single thing that we input into our, because we're talking and we have subscribers and like, you have to be like ultra careful in the financial world. But to be a politician, they don't care. They're just thumbing their nose at everybody and doing whatever they want to do. And it's just, it ain't right.
No, it ain't right. And it's disappointing. It's very disappointing. Jeff, thank you once again. Folks, if you enjoyed this session, please comment below this video if you're watching on YouTube. We want to get comments, feedback. Please send me emails, support@marketgeeks.com. If you want to reach out to Jeff, it's jeff@joyofthetrade.com. We will see you guys next week. We look forward to doing these. I learn a lot from Jeff. I'm hoping that Jeff learns somewhat from me. These conversations are really fun and interesting, and we love doing these broad market outlooks. Jeff, any last-minute words from you?
Staying alive, guys. Just keep it moving. Keep it moving. It's August. There's a lot of the game. There's at least there's 40% of the game left still to be played this year.
Definitely. Take care, Jeff. I'll see you. Bye, everyone.
Thank you.
Have a good one.
You too.